Hi guys, this is Brad Alexander from FX Large in London looking at the week ahead. Looking at the US dollar majors, we are clearly looking at dollar weakness, which all started 11 days ago due to the current political turmoil in Washington. As with any turmoil, gold becomes a safe haven for investors, and we're also looking here at a bull run. Political analysts are logically predicting that this isn't going to go away anytime soon, and in fact, Mr. Trump's issues may worsen when he returns home. If we switch from the 4-hour to the daily charts, we can see that we are near the extremes for the month, and on dollar Swiss, we need to go back to November of last year to find similar dollar weakness. On cable, we had consolidation in September of last year, and at these levels on Eurodollar in October. Ironically, this spike that we see on a few charts here was in fact the US presidential election from last November. During times like these, technical opportunities are hard to come by, and we must rely on fundamental analysis. That doesn't preclude you, however, from monitoring support and resistance levels. Here, for example, on dollar CAD, we are at a key level of support, which used to be a level of resistance earlier in the month and at consolidation in previous months. A break below 134.5 could see significant move lower, but watch out for Wednesday's crude oil inventories and an interest rate decision from Ottawa. As well, OPEC will be meeting all day Thursday, and if production cuts are on the table, the loonie should strengthen even further. On oil, we are hovering around the $51 per barrel mark on WTI, and OPEC cuts, we have room to move to this area of consolidation around $54 seen earlier in the year. If you are trading either the euro or the pound this week, fundamentals will be key as both governments are still arguing over the Brexit divorce settlement expected from Britain to the EU. This fight will rage on for a while and affect both currencies. As well, we have the German Business Climate Report due tomorrow, and Mario Draghi speaking at a Madrid conference on financial stability Wednesday. From London, Theresa May is speaking tonight on the BBC, and investors will be listening to every word, so be careful here as the interview will be held after 7 p.m. London time and therefore during times of low market liquidity. Keep in mind the UK will be staging a general election on the 8th of June, so expect a barrage of opinion polls and statements which will affect sterling. Tomorrow we have UK inflation report hearings and quarterly GDP on Thursday. Getting back to the US dollar, we have FOMC minutes Wednesday, unemployment claims Thursday, and on Friday we have monthly durable goods orders and quarterly GDP. Looking at the indices, we had successive bearish and bullish runs last week, and we could be looking at a bit of stagnation until the dust settles in Washington. The FTSE, however, seems to be on a nice upward march, and if Theresa May can keep a steady hand on the tiller with the UK economy, the general election campaign, and Brexit negotiations, we may be looking at continued UK equity strength. Last week's dip in global equities preceded a similar drop in the price of copper. The good news is that copper has rebounded to levels from the beginning of the month. The price of copper is, of course, an important barometer for the global economy and for the Australian dollar. Looking at the Aussie, we are at key levels of resistance on both Aussie dollar and Aussie yen, and we can see ascending triangles on their 4-hour and 1-hour charts respectively, so let's keep an eye on these during the next few days. In closing, today's tidbit. The Canadian dollar isn't called the loonie because its currency is volatile. It is nicknamed after the bird on the dollar coin. That's all for now. Happy trading, and we'll see you next week.